75 years of uninterrupted U.S.-Canada trade partnership, the largest bilateral trading relationship on planet Earth, just got shattered. Not by a war, not by a financial collapse, by one phone call, two signatures, and a Canadian Prime Minister who decided he was done waiting for Washington to act like an ally. Mark Carney has activated a $500 billion Green Trade Bloc, linking Canada to the European Union, to CPTPP nations across the Pacific, and to strategic energy partners that, until last month, were firmly in America's orbit. And he did it while Donald Trump was still tweeting about lumber tariffs. In the next 12 minutes, we are going to break down every dollar of that $500 billion figure. We are going to name the specific European and Pacific partners who signed on. We are going to show you the internal trade modeling that Ottawa used to justify this. And we are going to explain why the White House has no counterplay that doesn't hurt 8 million American workers in the process. If you care about where your energy comes from, where your job goes, or whether the Western Alliance survives the next 5 years, stay right here. Let's get into it. So to understand what just happened, you need to understand why it happened, and why Mark Carney is arguably the only leader in the G7 with the resume to pull it off. Carney is not a career politician. He ran the Bank of Canada. Then he ran the Bank of England, the only non-British citizen to ever hold that position in the bank's 330-year history. He was the chair of the Financial Stability Board during the global financial crisis. He was the UN Special Envoy for Climate Action and Finance. This is a man who has had the personal cell phone number of every central bank governor and finance minister in the developed world for 20 years. So when Donald Trump slapped 25% tariffs on Canadian steel, aluminum, and critical minerals, and then expanded them to lumber, dairy, and auto parts, Carney didn't do what previous Canadian leaders did. He didn't fly to Mar-a-Lago. He didn't call the U.S. trade representative. He didn't grovel. He got on a plane to Oslo, then Brussels, then Tokyo. And then, and this is the part that made Washington genuinely nervous, he had a very quiet, very long dinner with senior EU Commission officials about something called variable geometry trade architecture. Now, what does that mean? Variable geometry is a term from EU integration theory, and it essentially means not everyone has to agree on everything at the same time. You build a coalition of the willing, you start with the countries that are ready, you harmonize the standards that matter most, in this case, carbon border adjustments, critical mineral sourcing, and green energy certification, and you create a parallel trade lane that exists completely outside of U.S. tariff jurisdiction. That is what Carney built. He constructed a bridge, not a bridge between two countries, a bridge between two entire economic systems, the EU's carbon border adjustment mechanism known as CBAM, and the CPTPP's market access framework across 11 Pacific nations. Canada sits at the exact geographic and regulatory midpoint of both, and Carney leveraged that position like a former central banker would, coldly, precisely, and with receipts. Here is the key part. This was not a press conference play. This was not posturing. The framework agreements are signed. The regulatory mutual recognition protocols are filed. The first shipments of Canadian critical minerals under the new green certified supply chain standards are scheduled for Q3 of this year. This is real. It is happening. And Washington found out about it the same day you did. All right, let's talk about the $500 billion. Because I know what some of you are thinking. That number sounds inflated. That sounds like a talking point. So let's break it down, piece by piece. No spin. Canada's total annual goods trade with the United States has historically run between $700 and $780 billion, depending on the year. That's imports and exports combined. Roughly 75% of everything Canada sells goes south. That's the dependency. That's the leverage Trump has been exploiting. But here's what Carney's team modeled. Layer 1, EU-Canada trade expansion under CETA 2.0. The original Comprehensive Economic and Trade Agreement, CETA, went into force in 2017. It increased bilateral trade by about 27% in its first 5 years. But It was always seen as a first draft. The new enhanced framework, what Brussels is internally calling CETA-plus-green, expands coverage to critical minerals, rare earth elements, hydrogen, and clean electricity exports. The projected additional trade volume over a 5-year horizon, $140 to $170 billion. That's layer 1. Layer 2, CPTPP green supply chain integration. Canada is already a member of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. So is Japan. So is Australia, Vietnam, Malaysia, Singapore, Chile, and others. Total GDP of CPTPP member states, over $13.5 trillion. Under the new protocols Carney negotiated, Canadian critical minerals, lithium, cobalt, nickel, graphite, get preferential green certified access to CPTPP battery and EV supply chains. Projected additional volume, $90 to $120 billion over 5 years. That's layer 2. Layer 3, bilateral energy and hydrogen deals. This is the one nobody is talking about yet. Canada is sitting on the 3rd largest proven oil reserves on Earth, and it has massive untapped potential in green hydrogen, small modular nuclear reactors, and hydroelectric export capacity. Carney signed preliminary energy framework agreements with Germany, Japan, and South Korea, 3 nations that are desperate to diversify away from Russian, Middle Eastern, and Chinese energy dependence. Projected volume here, $130 to $160 billion in energy trade over the next decade. Layer 3. Now add those up. $140 to $170 plus $90 to $120, plus $130 to $160. You get a range of $360 billion on the low end to $450 billion on the high end for committed and projected trade flows. The $500 billion headline number includes ancillary service trade, financial services integration, and carbon credit market access that comes along with these frameworks. Is it exact? No. Trade projections never are. But is it in the ballpark? Absolutely. And more importantly, the trajectory is what matters. Every single one of these trade lines is growing. Meanwhile, U.S.-Canada trade, under Trump's tariffs, it's contracting. That is the math. And math doesn't care about tweets. Now, before we get into Trump's reaction, and believe me, it's worth the wait, I want to hear from you. Drop a comment right now. Do you think Carney's variable geometry strategy, building flexible trade coalitions outside of U.S., influence, is the future of Western trade? Or is this a dangerous gamble that fractures the very alliance system that kept the peace for 75 years? Tell me what you think. And if you're not subscribed yet, now is the time. We are covering the biggest shifts in global trade and geopolitics every single week. And the next 6 months are going to be wild. All right, let's talk about the reaction. Here is where it gets ugly and fascinating. Donald Trump's initial public response to the Green Trade Bloc announcement was characteristically dismissive. He posted on Truth Social calling Carney a failed banker and claiming Canada needs the United States far more than we need them. He threatened additional tariffs on Canadian hydroelectric power imports and suggested he might invoke national security provisions under Section 232 to target Canadian uranium exports, standard playbook, escalation, intimidation, dominance signaling. But here is the part the media is missing. Behind the scenes, the U.S. Trade Representative's Office and the Commerce Department are scrambling. And the reason they're scrambling is something I'm going to call the green receipts problem. Here's what that means. The entire architecture of Carney's trade bloc is built on carbon-adjusted trade standards. Every product that moves through this system carries a verified carbon footprint certification. The EU's Carbon Border Adjustment Mechanism, CBAM, already requires this for steel, aluminum, cement, fertilizer, and electricity. Starting in 2200, it expands to cover more sectors. Canada, under Carney, has pre-aligned its carbon pricing and industrial reporting systems with the EU's CBAM requirements. That means Canadian exports enter the EU market with zero carbon border tariff adjustment. They're pre-cleared, they're green certified, they get preferential access, Now, here's the problem for the United States. American steel, American aluminum, American manufacturing exports. They do not have equivalent carbon certification. The U.S. has no national carbon price. It has no CBAM equivalent system. It has no mutual recognition agreement with the EU on carbon standards, which means, and this is the devastating part, American exports to the EU are about to get hit with carbon border tariffs that Canadian exports avoid entirely. Trump cannot counter this with traditional tariffs. You can't tariff your way out of a carbon compliance gap. You can't threaten Brussels into abandoning CBAM. It's the centerpiece of the European Green Deal, and it has overwhelming political support across the EU Parliament. So what is Trump's play? He can escalate against Canada bilaterally, sure. More tariffs, more rhetoric. Maybe sanctions threats, but every time he does that, he pushes Canada further into the EU and CPTPP orbit. It's a strategic trap. The harder Trump squeezes, the more justified Carney becomes in diversifying away. And Carney knows this. That's why he's not responding to Trump's posts. He's not engaging in the media war. He's just quietly signing agreements, filing regulatory documents, building infrastructure. It's the central banker approach to geopolitics. Don't argue about the interest rate. Just move the rate. So who actually gets hurt here and who benefits? Let's start on the American side, because this is where the human cost gets real. The U.S.-Canada trade relationship directly supports approximately 8 million American jobs. That's according to the U.S. Chamber of Commerce, not a Canadian source. 8 million, spread across all 50 states, with the heaviest concentration in Michigan, Ohio, New York, Texas, Minnesota, and California. Now, not all 8 million of those jobs are at immediate risk, but the sectors most exposed to Carney's trade diversification are exactly the ones Trump claims to be protecting. Auto manufacturing. Canadian parts and assemblies feed directly into the Detroit supply chain. If Canada redirects even 15% of its auto parts trade towards CPTPP partners, particularly Japan, where Toyota, Honda, and Nissan are already restructuring supply chains for EV production, that's a direct hit to Michigan and Ohio plants. We're talking tens of thousands of jobs affected. Energy. 22 U.S. states import Canadian energy, oil, natural gas, electricity. If Canada accelerates LNG and hydrogen export infrastructure toward European and Asian buyers, the price of Canadian energy to American consumers goes up. Not because of supply shortages, because of competition. Canada will sell to whoever offers the best terms. And right now, the EU and Japan are offering very, very good terms. Agriculture. This one flies under the radar, but it's significant. Canada is a top 3 market for American agricultural exports: soybeans, corn, pork, dairy equipment. If trade friction intensifies, retaliatory measures on American agricultural imports are the first and easiest lever Canada pulls. They've done it before, during the first Trump-era tariff war, and American farmers felt it immediately. But here's the flip side. Look at this data from the Canadian perspective. Canada's energy sovereignty equation changes fundamentally if this trade bloc succeeds. For decades, Canada has been what economists call a price taker in energy markets, producing enormous volumes but selling them almost exclusively to one customer at whatever price that customer set. The U.S. has been buying Canadian oil at a persistent discount, the Western Canadian Select spread, that has cost Alberta producers billions over the last 15 years. If Canada can build the pipeline and LNG terminal infrastructure to export directly to Europe and Asia, and the Green Trade Bloc framework includes expedited regulatory alignment for exactly that infrastructure, then Canada becomes a price maker. It creates competitive tension between buyers. It gets fair market value for its resources for the first time in a generation. That's the sovereignty argument. And it's powerful because it's not about ideology. It's about a country that is tired of being economically captive to a neighbor that keeps changing the rules. And that ultimately is the real story here. This isn't about Mark Carney being anti-American. It's about a rational actor looking at the incentive structure, tariffs going up, reliability going down, alternative partners ready and willing, and making the economically logical move. The question is whether it's reversible. And most trade historians will tell you, once you build the infrastructure, sign the agreements, and redirect the supply chains, the answer is almost always no. Here's the bottom line. Mark Carney has done something that no Canadian Prime Minister has ever done. He has called America's bluff, not with rhetoric, not with counter tariffs, but with a structural alternative, a $500 billion web of trade agreements that gives Canada a viable economic future that does not depend on the political mood of whoever sits in the Oval Office. Is it risky? Yes. Building new trade infrastructure takes years. There will be friction, delays, and political pressure from both sides of the border. The U.S. is still Canada's largest trading partner by an enormous margin, and that won't change overnight. But the direction has changed. The assumption has changed. For 75 years, the assumption was that Canada and the United States were economically inseparable. That assumption is over. And whether you think that's brilliant strategy or a dangerous fracture in the Western alliance, I want to hear it. Drop your take in the comments. Tell me, is Carney's variable geometry approach, building flexible coalitions of the willing outside of traditional alliances, the new playbook for middle powers in the age of tariff wars? Or is this the beginning of something we're all going to regret? Subscribe if you haven't. Hit the bell. Share this with someone who needs to understand what just shifted in global trade, because the mainstream coverage is going to take weeks to catch up to what we just covered in 12 minutes. I'll see you in the next one.